COVID-19 continues to shake up Wall Street with record highs and lows. But what will recovery look like? Will it be a quick rebound like a V, the letter, or bounce up and down like a W? I asked local financial professional Mike Kojonen that question tonight.
Most economists believe we're in a V, and we saw a sharp down, but we're seeing a sharp up, which is the best case scenario for us. But some economists believe we might have another downward tick as well, which would turn it into a W, drop it back down, and then we'd have to go back up. Whatever it is, it's fun to talk about the economies and these shapes, but it has nothing really to do with your retirement plan. That really doesn't change.
Yeah, what has led to some of these ups and downs, would you say, just maybe in the past few weeks? Is it just the fact that more people are maybe getting out and spending some money? Is it just the natural ebb and flow of the market at times? Yeah,
it's kind of hard to see. I mean, recession is still a lot of unemployment, but you hear bad news, but the market's going up. And I mean, we've seen even a little bit of downturn the last few weeks, and that's been a lot of the investors taking the profits off the table before the end of quarter number 3. So we've seen that as well. But, you know, the stock market is its own animal in itself. It's not always going to follow the recession or the economy in a sense. It's separate. And I always tell my clients it's hope and fear. So a lot of times it's driven by hope of what's the outlook to be. It doesn't mean that's reality, but also fear as well, because we hear some indicators, financial indicators that most people are not watching, and that's driving it as well.
So what should people be thinking as they head into like the last couple months of the year, if they want to maybe make some moves in the market or just get going with their planning for their retirement?
Yeah, that's the thing. Just plan. I mean, how many people I talk to over the years and every week that, you know, they're picking a retirement date, but they never had a plan in place. And so we're meeting them for the first time and developing a plan on the go here. That's important. But you have to factor in, you know, your Social Security and pensions and IRAs and tax planning and the distributions of all the different types of accounts you have, estate planning. You need to work with a financial professional who does that so you can plan. You only get one chance to do this right. So why would you want to just leave it up in the air and just on a whim, just retire? I know we're fed up sometimes at our jobs, our careers. You need to have that plan in place to make sure you can stay retired and not have to go back to work.
Should people just be playing it safe, so to speak, or is there some room to maybe adjust portfolios based on what the market is doing at the moment?
Yeah, I think the best case scenario for people this year, they didn't touch their portfolios. It was great because the market came back and then some, and that was great. They didn't have to change anything. Now, as long as you were not retiring this year, you probably didn't have to make any changes. But that's a different story. And I don't know, Jeff, if you heard the rule of 100.
Oh, go on, not yet.
You haven't heard the rule of 100, and some people haven't. But you take your age and subtract that from 100, and that should determine the percentage of money you should have in high-risk investments. So that means the older you get, the less risk we should have. And just say, I don't know exact age, just say 30 years old, and so you should have 70% of your portfolio should be in roughly equities. That's just a rule of thumb. That's not a perfect science when it comes to that. Now, obviously, there's some accredited investors who have a lot more assets. They don't have to follow by that rule, but that just goes to show you the older we get, the less risk we should have in your retirement.
Well, again, Mike, as always, thank you for this financial advice, hopefully helping people navigate these confusing but also well-off times in the stock market at the moment.
Yeah, you're welcome, Jeff.
You'll find more money advice from Mike on WCCO.com.